Hi, hello everyone. Welcome to Learn to Earn channel. In today's video, we would focus on two chemical stocks that are going to give massive returns. And why I'm saying that, I will justify it step by step. You can see methodically, I am proving that these stocks are bound to grow in near future, and you can also look forward for it. And I'm directly let us get into these stocks. So the first stock that I wanted to talk about is Hearty Industries. Let me take you through the fundamental analysis and technical analysis of where we are in terms of Hearty Industry and why I think this is going to grow. So Hearty Industries, you may be familiar of it. If not, Hearty Industry falls under the chemical stock, and you can read a brief of the chemical stocks. Hearty Industry is very participative or an Indian manufacturer of specialty chemicals, and their major contribution is towards the pharma industry. And if you also see their revenue distribution here, 83% of their revenue comes from specialty chemicals, and the remaining 17% comes from their pharma industry. And even within the specialty chemicals, they are the lead manufacturer of benzene, that is one of the chemicals, specialty chemicals. And on the pharma also, you can see like they have 61 percentage of the revenues accounted through APIs, and their global presence is not concentrated on any of the single geography. That's a great advantage. So their in India market accounts for almost like 60 percentage of their revenue. Market 40% is distributed across. That's a very good thing. And on the client base, they have major clients, right? They have almost like 700 plus domestic clients and 400 plus global clients. And their major clients also include BASF, Torre, Bayer, and all. These are very big companies. This is the base of Aarti Industries and what they are operating in. So this is more of an industry analysis and which industry they are operating in, and their market analysis as well. Next, we would talk about the market cap. So if we take a look at the market cap, they are almost like fall in the large cap category. As per the definition of any company which over and above 20,000 crore rupees has a market capitalization comes under large cap. But still, we can see this as relatively a smaller company as compared to the conglomerates out there, right? This is not a nifty 50 company to say. And the current price of Aarti Industry is 760 rupees. You can see here the highs and lows, right? Just trading above the low 52 weeks low price, and that is an important point to note it. Stock P is 21.1, a way higher P, or is it a low P? We will see it in a while. And then you can also look at some important parameters like return on capital employed, 22.7 percentage. For every 1 rupee invested in this company, they are generating almost like 22.7 percentage return. That is 1.227, 1 rupee and 22 paise is what this company is generating. And so next we will go to the chart. So if we take a look at the chart, right? So some few important parameters that we have to notice here. This is a 1 day chart, and it is 50-day moving average comes to around like 740, 750, close to 750. But it is still way below the 200-day moving average. When we talk in terms of 6 months, right? Again, the same case, but then you can see here the stock has traded recently on its 52 weeks low, and now it has stagnantly, consistently going up. And on the 1 year chart also you can see the same. Let us take the maximum. So if we talk about Aarti Industries as such, it has started trading somewhere like in 2005. That is what this chart shows. So it's a very reliable company, and it is in the market for many years. So as far as the investment is concerned, for the longer term, definitely it's going to give us a good result. If you are a long-term investor, definitely you can start considering Aarti Industry as one of your fine bet. If you stay invested for 5+ years, definitely it is going to give you returns, and I will tell you why that is the case as well. If you see here, the volumes are also very high, and the volumes are very high, almost like 8,000k. And it was trading at a price of around 1,150, and now it has come down. So it is definitely going to go back here. Why this blip is there? The reason being the quantitative easing happened. Almost most of the stocks are trading at its lifetime high when there was cheap money available in the year 2020 and 2021, right after the pandemic. and let us see the PE ratio. The PE ratio is at its almost like even below the median, right? The median PE is 22.1. It is still trading below 22.1. So what does it mean? The investors thought that the potential of growth for Aarti industry was somewhere around like 60 times or 64.4 at its peak. Now it has come down low because it is now trading at a lifetime low for the reason that the quantitative easing has completely been shut down, or the RBI is raising their interest rates. And whether it's going to be a good PE for us or a bad PE for us, we'll compare it with along with its peers. And some of the other things that you can consider is company is almost like debt free. They have like very less debt. You can look at the debt to equity ratio, and this is a phenomenal figure, right? Company has delivered a profit growth of almost 33%. That is one third of it CAGR for last 5 years, and that's not an easy thing. The some of the cons of this is this: we are least interested, and this is where I'm more interested in. They are capitalizing the interest costs, meaning that they are paying huge interest costs for the debt that they have taken. Promoter holding has decreased. Let us see what is the promoter shareholders holding for now. If it is like close to 50 plus percentage, I feel that it is good. Even 40 plus is also a good share. And yeah, now is the peer comparison we have here. Look at the PE, the Pidilite industry, which definitely is a very good stock, but as compared to Pidilite, you look at the Aarti industry, it is the PE is very low, so it is bound to grow. That is what I am betting on, and the market capitalization is also high. Dividend yield is decent, that is 0.26 percentage, and also the return on capital employed as compared to the other peers. So if at all I have to rank the peers, Pidilite falls. Deepak Nitrate is the number one, and followed by Pidilite second, and then Solar Industries number three, and Aarti Industries. We have to take all these parameters together. We cannot look at only ROCE purely based on ROCE, right? But still, it is a very good ROCE, return on capital employed. And let us look at the sales figure. So from 2019 to 2022, it has almost grown like 65 percentage plus, right, on the sales front. And on the operating profit also, it has grown like massively. It has grown like 30 percentage, and operating margin is also consistent. There is a blip again, 41 percentage. This could be one of the instances, but on an average it is growing at like operating margin is 19 percentage. They are maintaining a healthy margin for a capital intensive industry like this. And the net profit has also grown tremendously. Almost they have doubled, 1.5 times, 1.5 times from 2019 to 2022. Again, according to me, this is a very good figure because they have grown 50 percentage in terms of net profit. Few other parameters that I would look into before I invest into any of the stocks is the operating profit that we discussed here, the profit and loss statement. Here comes one of the important things. Continuously on a CAGR of like for the last 10 years, or Aarti industry has grown like 15 percentage, has kept their sales growth for 15 percentage, and that has been increased by 3 years. So what does this figure denote? In the last 3 years, on a CAGR of 19 percentage, the sales had grown. That means, so we can expect the industry to grow even at a much faster pace in the years to come. And the profit has also been phenomenal. They are maintaining a healthy profit range of 29 percentage, almost like 30 percentage. And see here, even the last 3 years it is 39 percentage. From year to date it is like 150 percentage. So we have to wait and see where the year ends for Aarti Industries. And except for this 1 year, that is this year, if you see, this is one of a phenomenal returns. If you had invested 100 rupees 10 years before, what this figure indicates is it has grown on a CAGR of 46 percentage. The benchmark itself is giving like 12 percentage. I understand that it's a risky bet, but still Aarti Industries has proven that it could deliver consistently for 46 percentage for the last 10 years, and that comes to for 5 years it is 26 percentage. And this is what we have to take into account. Definitely historical performance is not a proof of the future performance, but most of the stock market works in that way. That is the mechanism purely we rely on. Hence, I believe the fundamentals are very good for Aarti Industries, and we can definitely consider Aarti Industries. Also, we would take a look at the shareholding pattern. It is 44.19 percentage. Yeah, it has got reduced from 48.29 percentage to 44.19, almost like 4 percentage reduction. That is what one of the con referred here. So almost I believe Aarti Industry is well poised to grow. And what could be the range we can rely on? If we take a closer look at it, in the last 1 month, the low for Aarti Industry has hit on 5th July. That was around the figure 684. I am not very sure whether again Aarti Industry would go back to 684 figure, but definitely it is still in the buying range. Anywhere between like 720 to 740 should be a good buy range for Aarti if we are a long term investor and going to buy in bulk. The next chemical industry that I wanted to compare or I wanted to bet on is Deepak Nitrate. You all are well aware of Deepak Nitrate. It is considered to be a multi-bagger, and let us see where it stands here. The market capitalization of Deepak Nitrate almost similar as that of the Aarti Industries, and the high for this is 3000 plus, and it has lost almost like 50 percentage of its value. um, this is a high volatility to say so, but still Deepak Nitrate has been there for decades, and it's a reliable company to lean on. That's what I am betting on. And stock P, just now we had a look at the stock P, we will compare it along with the peers, and then the return on capital employed is even much higher than that of the Aarti Industries. For Aarti Industries, it was somewhere around 22 percentage. Here it is almost 44 percentage. Let us take a look at what they do. Deepak Nitrate is well known, but quickly let us do the industry analysis and on which market they operate in. Deepak Nitrate is again a chemical manufacturing company based out of Gujarat, and this is more into the B2B business. Aarti Industries also. The main factor that you need to take into account is Deepak Nitrate has almost like 70 percentage market share in few of the chemical ingredients that they operate in. So again, you can see their revenue has also distributed. The phenolics is around like 58 percentage. Basic chemicals gives them 17 percentage revenue, and then the specialty chemicals is around 80 percentage. Now a question can come, isn't it my diversification of the stocks get affected? Definitely no, because Aarti Industry purely operates on the specialty chemicals barring a minor percentage, whereas this is a complement. Deepak Nitrate is going to be a complement for that because their specialty chemicals has only 18 percentage of its revenue. And the geographical distribution also, it is not concentrated in anywhere. Within domestic 71 percentage, and then Middle East and all the rest of the world they are operating at 29 percentage, and they also have expansion plans. So the future plan is very clear. They wanted to double their capacity, so that is the growth plan Deepak Nitrate has. Let us quickly have a look at the chart. The best thing is Deepak Nitrate is even operating at below the 50 days moving average and 200 days moving average, and still it is in the buying range. That is what I personally feel. And you can see it has gone to the max of like 3020. That is what the 52 weeks high is. When we take a look at the PE ratio, this is available again at a phenomenal PE ratio, one of the stocks to consider. Comparing the pros, company is almost debt free. Company has again delivered a good profit growth of 87 percentage in the last 5 years, right, with the CAGR. That's again a phenomenal track record for Deepak Nitrate. Here also you see Aarti Industries and Deepak Nitrate have almost the lowest of the PEs. It is going to go high for the reason investors once believed the PE to be as high as like almost 40.4, right? It is somewhere in October 21. It's almost going to be like 8 months. Nothing has changed fundamentally. The industry remains the same. Only thing is the cheaper money that was available right after the pandemic is available not now. Hence the stocks have come down, and once again the stock bounces back, it is going to grow tremendously. Let us look at the sales figures. What is the revenue they have clocked? So from almost 1000 to 1872 quarterly basis, again They have grown like almost 80 plus percentage, and also their operating margin has been consistently in the range of 25, 20 and 25. It's again a good range to lean on. And their net profit has also grown like twice, from 132 to almost 264, 100 times, 100 percentage, right? And let us look at these figures. So compounded sales growth, and the 5 year CAGR on sales front is they have clocked like 38 percentage, and they have been consistently maintaining this. And on the profit, this is a phenomenal figure, I would say, right? They are maintaining a CAGR of 87 percentage on the stock price. That's the reason it has become a multi-bagger. It has given 60 percentage CAGR returns for the last 10 years, and 61 percentage, and that in the last 3 years 88 percentage. And if you look at the figure here, it has started somewhere in 2005 on 9 rupees, and then it has reached here. Okay, multi-bagger means like in a very short span of time it should have grown. It is not that way. It has slowly and steadily Deepak Nitrite has grown, and definitely wherever you look at it, the stock has given like almost 50-60 percentage returns. So that's a story, success story of Deepak Nitrite. And let us take a look at the shareholding pattern. The shareholding pattern is healthy, and they have been maintaining this with 45 percentage, and domestic investors hold around like 10 percentage. Put together it is like 55 percentage, more than 50 percentage. Hence I am thinking that definitely Deepak Nitrate and Aarti Industries is bound to grow. Thank you.